The Bank of England has been around for more than 300 years, and never in that time has it dropped interest rates so low. Today's cut of the base rate to 1.5% was the fourth reduction in as many months, all of them designed to get the economy moving again. But the majority of lenders are not expected to pass on the full cut, something Gordon Brown said he would address in the next few weeks. In a moment, we'll look at other options. But first, Hugh Pym reports on interest rates at an all-time low.
It's a day for the history books. Never since the reign of William III, 1694, when the Bank of England was founded, have we seen interest rates as low as they are now, 1.5%. And in the dealing rooms they say stand by for even lower rates. The latest half percentage point cut, most believe, won't be the last.
50 basis points, exactly what the market expected. That's what the markets had priced in prior to the news. The market is perceiving this as a step along the way to lower rates.
The economy is in deep recession. It needs more stimulus, as much as we can possibly give it.
For generations, interest rates have had their ups and downs. They were at 5% back in the early 18th century, and then down to 2% by the mid-19th century. Rates were as high as 10% by the outbreak of the First World War, but they fell back to 5% in the 1920s. And then 2% under Winston Churchill in the war years. The all-time high was 17% at one stage in the Thatcher era. And now today the Bank of England has cut rates to an all-time low. But it's just the latest in a series of dramatic reductions which have seen the cost of borrowing come down by nearly 3/4 in the space of just 12 months. A year ago, interest rates were at 5.5%. By early October, they were down at 5%, and then a series of big cuts saw the cost of borrowing reduced to 2% by last month, and today, 1.5%. So where now from here? Some in the financial markets and one former chancellor argue it's time for the bank to pause for breath.
There is so much being done by each government in each country, just chucking money over the wall and cutting interest rates drastically without waiting to see what the results of these policy measures are.
But out in the world of industry, there's a feeling that the Bank of England could have been bolder and gone for a bigger rate cut to boost the economy.
Just cutting by half a point will not lead to borrowing costs actually being reduced for manufacturers. I think if we'd seen a larger cut of a full percentage point, we'd have seen a much better chance of it being passed on to businesses and to consumers.
The reductions since October have affected households in different ways. Furhan Khan is a homeowner with a tracker mortgage. Including today's cut, his bill will be reduced by £600 a month. But it's another story for savers like Jackie Branson and her 92-year-old mother. The recent cuts in rates have hit their income hard. So the Bank of England's move was bad news for savers. It won't be much consolation for them that the authorities want them to spend to help the economy rather than investing their money. Hugh Pym, BBC News.
Now, if this latest record-breaking cut in the interest rate does not free up cash in the economy, many experts are asking whether there's any point in dropping them further. John Moylan has been looking at what other options there are to halt Britain's economic downturn.
Interest rate cuts are one of the key ways of boosting the economy. These are some of the biggest we've ever seen, and there's every prospect they could go even lower. But rate cuts take time to have an impact. So is this unprecedented action actually working? The continuing carnage on the high street suggests not. Today the entertainment chain Zavvi announced 180 job losses and closed 22 stores. But Sainsbury's said it had enjoyed its best ever Christmas. So are lower rates making some feel better off?
I do feel better off, yeah, because I've got no savings and I've got a big mortgage.
Not really, no. No, because your savings aren't making as much, are they? So, you know.
I feel marginally better off because my tracker mortgage has been reduced, so I suppose the answer to that has to be yes.
But how low can the bank rate go? If the US and Japan are any indication, there could be more reductions ahead. In both countries, key rates are barely above zero. Many economists expect that rates will have to tumble from 1.5% today to try and stave off a deep recession, ultimately hitting zero. But for many, it's not the cost of borrowing cash, but getting banks to lend it that's the problem.
Fantastic.
Andrew Gilbert runs this IT firm in Derby. It's bucking the downturn, growing fast, making healthy profits. Now he wants to expand, but the banks won't provide the cash.
The interest rate cuts won't really help us, although it will decrease some of our costs, our operational costs from the lower interest rates. But the challenge is getting the fund in the first place. The interest rate doesn't matter if the banks aren't giving us the funding needed to buy the equipment.
So what else can be done? Back in the autumn, the government bailed out the banks, but it may now have to go much further to ease the credit crunch. One idea could see the government and the banks swapping certain assets for cash to boost the money supply. Some critics say this amounts to printing money. So, is it an option?
We're looking at a range of measures to support the economy, to support business, to help people. But nobody is talking about printing money. There is a debate to be had as interest rates approach zero, as they're doing already in the United States. But for us, that is hypothetical.
In other words, nothing is being ruled out. But as interest rates plummet ever lower, we're entering uncharted territory, and no one knows if any of this will work. John Moylan, BBC News.
Well, within hours of the interest rate cut, there was yet another example of just how severe the downturn is. The car maker Nissan announced it was axing 1,200 jobs. The jobs will go at the firm's plant in Sunderland, which has around 5,000 workers and is one of the biggest employers in the northeast. Well, Ray Buchanan is there for us. Raymond, I mean, these workers are said to be some of the most productive in Europe. It must have come as a shock to them.
An enormous shock, George, to the staff when they were told these 1,200